One of the questions we're asking in Davos 2016 is whether this is the chance for India to shine again. Well, it's a question I'm going to put to Manish Kejriwal of Kedaara Capital as well. Manish, welcome to Davos. Thank you for speaking to us. What is your outlook on the Indian economy right now? And do you think, because you're a Davos regular, that this is going to be the year that India is back in the spotlight?
Thanks, Menaka, for doing this. Beautiful day, guys, out in Davos. To your question, I think India, I don't know if it's this year, you can never be that short term as investors or as people, but I do think the next 3 to 5 years could be very unique for India if we play this well. And let me explain that. I think if you look at the global economy today, and you have to put in the context relatively to the rest of the world, you have oil prices, which is making people nervous on one hand, down under 30, under 28. For India, that's terrific. It solves or helps solve the budget deficit, the current account deficit, and if handled properly, can also address part of the budget deficit. We have commodity prices at an all-time low. We have a situation where, 3 or 4 years ago when we were raising our fund, Menaka, as you remember, China was the only guy standing. There was no interest in India. Today, people are confused on what's happening in China. Russia, Brazil, Turkey, there's not a bright spot out there. So relatively, we have a terrific situation. We have a situation also where our economy, while we're doing more and more exports, is primarily a domestic economy. And I know that the overall economy has been suffering, but if you look at some of the smaller companies, there's actually lots of pockets of growth. So I do think that in this current environment, relative to the rest of the world, we have a unique position. We also have a government which seems to know exactly which direction they want to go at. And hence, I do think if you look at the next 3 to 5 years, next 1 year, who knows what will happen? The world might fall apart. There might be a contagion. The Fed is increasing interest rates. Money might leave the country in the short term. But over 3 to 5 years, from a secular perspective, we're in a beautiful position.
Okay, you have an interesting portfolio of companies. 2 are in the packaging business. 1 is in the logistics business. You've got an NBFC. I'm curious to know what appeals to you the most in this economy with a lot of potential, but not yet the growth that we want, and what your strategy for investment will be in 2016. You've already invested some north of 800 crores, if I understand correctly?
No, I think all that is true. And I do think before we kick off, I think on the India story, and I think it'll be partly ratified by our portfolio companies, which we know we don't normally talk a lot about, but we're making an exception here, Menaka. If you look at each of our companies, they've actually grown between 15 and 20% over the last 12 months. And the reason is these aren't Nifty 50 or Nifty 30 or Fortune 500. These are companies about 1,000 to 2,000 crores of EBITDA. The sort of position we take when we have the sort of operating partners who work with us, the value we add, it's relatively easy to grow these companies more than what the competitive spirit is doing. Now I go back to your question on strategy. We are sector agnostic. That's the most important thing. And I think it's important to understand why we set up Kedaara, to understand our strategy. We set up Kedaara at a time when there were too many funds, too much money chasing India, and people were sort of shoving each other, including ourselves in our previous jobs, to get into deals. So there were very high valuations, number one. And even when you got in at a somewhat reasonable valuation, it was very difficult to exit your investment. So the critical driver for us is to get in relatively cheap, or cheaper than what you would, sort of suffer with. Because no matter how much work you do and improve the performance, if you come in at a high price, you can't ever get out and make money. And secondly, we want to be in situations where we know we can drive the exit. We can get out. We're not stuck forever. We want to be with the companies for 5, 7 years, but we want to make sure that we will be able to get out. So when I tie that back to our strategy, sector agnostic, we look at and we'll go through a couple of examples, but we also take situation and positions where we have an almost equal equity ownership with the existing promoter. And so we jointly drive the company to its full potential and drive exit. Let me explain both logistics as well as the NBFC and the 2 packaging companies and an automotive component company, which you didn't mention.
Sorry.
All these 3, if you look at financial services, and we've seen this from our Temasek days, it's the best. It's a leverage proxy in the growth of the Indian economy. This company we invested in, it's in Jaipur. It's sort of under the radar. It's grown much higher than what we thought it would be. It's called AU Finance, run by a great guy called Sanjay Agarwal. The packaging companies, on the other hand, is another example where if you look at consumer, we love the consumer play in India, but every company in India and the consumer side of it's listed is trading at 30 to 40 times EV EBITDA. If you look at even a Unilever, a massive behemoth like that, is trading at a very high multiple. If you make investments in let's say a chips company, which is also trading at wants a 30 times EV EBITDA, it's a slight global correction as we're seeing right now, and you'll be underwater. So for us, what we've done, we've taken proxies to the growth. We've taken a proxy to consumer growth and said packaging. How can you get a better proxy than packaging? For every bar of soap that Unilever sells or P&G sells, there will be a package which will be involved in. So if there's a growth in the consumer space, there'll be growth in packaging. And we managed to enter those companies at a much lower multiple. We have a very close, both the companies, Parkinson's and Manjushri Packaging, are leaders in their field. One makes printed cartons. It's a leader in the field. The other makes PET bottles, large supplier, not only to the Pepsis and Cokes, but also to the pharmaceutical industry. As those industries grow, these companies will also grow tremendously. And we work very closely with our operating partners, which include Sanjeev Aga, Pramod Bhasin, and Aditya Vij, who spent time with General Motors, and with Vendi Banga to really improve the importance and performance of these companies.
Manish, are they also a proxy to the e-commerce play? Because you really have no such company in your portfolio. Is it because valuations have just gotten outsized?
Or I'd rather say, Menka, is we're not smart enough to understand the valuations in the e-commerce space. So we don't understand the valuation. We can't. And on a serious note, if the things are getting heaty, we'd rather keep out of it, given what we said. And hence, you're right. If there is a proxy logistics, the main reason was not because of e-commerce only, but this company we invested in, Mahindra Logistics, terrific company. We've partnered with the Mahindra Group. Till we entered, obviously the largest client was Mahindra & Mahindra, and moving its vehicles, its auto component parts from plant to market and plant to plant. But increasingly, we have focused on the e-commerce space. It's going back to saying, even if you don't want to invest in the gold mine, invest in the shovels. So for us, it's really, we don't understand the valuations in e-commerce, but now in terms of logistics, we've become one of the largest logistics providers to many players in the e-commerce space.
Okay. You spoke of exits. Is this going to be an easy year for exits? Last year, we saw some private equity players manage to finally exit some 7, 8, 9-year-old investments. But the IPO market's not quite been on fire. And this year's going to look tougher, especially with the fund outflows that we've seen take place. So what's the exit scenario really this year, according to you?
No, I think when you look at exits, I think you've nailed it. And it's a good question, Menka. There are two broad types of exits you can have. One, which we've traditionally believed in as a private equity industry, which is believing in and relying on the public markets. And that, like you said, the first 3 weeks are not exactly the great start to a year. And I do think the volatility will remain. The one constant will be volatility. Yeah. And there's no way you and I can talk about what's going to happen 8 months down the road. So for us, and even for my friends who are planning to go public, I always say in a situation like this, have a backup plan. So the IPO, yours? Sorry?
What's your backup plan?
So for us, actually, IPO is not the preferred exit in most of our investments. In many of our investments, there's an understanding that if there is a huge amount of strategic interest in the company or in the sectors, we will be looking at selling the company as a whole, not just us, but also our partners. Now, we won't go into each specific situation. I know where your mind is going, but we're not going to go to the individual session. But on that regard, if you've seen the last 24 months, especially after the Modi government coming in place, the one thing one cannot refute is there is significant interest in India with the global multinationals. And not only FII, but the amount of FDI in India is increasing, and India is becoming a lot more relevant to the global MNCs. So if you see today, if there's an MNC which wants to invest in emerging markets, what are his choices? Russia is not exactly in the pink of health. As we said earlier, Brazil is tough. China was the obvious thing. Today we are seeing many situations where India is being preferred over China as an entree into Asia. And often some of the MNCs we've talked to are preferring to enter India first rather than go into China. It's not a competition, but all I'm saying is for those companies which don't have an India strategy or an India presence, global MNCs, India is becoming increasingly important. And at minimum, and I think the government's done a whole bunch of great things, but at minimum, the awareness of India to a global company has become a lot more relevant in the last 18 months.
Okay, final question then on policy. Whether it is the startup policy or it is, which was announced just a few days ago, or it is the AIF regulations, or even the SEBI announcement on a new listing platform for startups, do you see many of these helping the startup environment? Do they make a material difference to your investments or investment strategy?
I'll answer the second one first. We don't do startups, so for us it's relatively irrelevant. Having said that, I do think what's appealing on India to global investors, to myself when I was at Kedaara or when I was at Temasek, or even in McKinsey earlier, the entrepreneurship culture in India is so strong. But the issue has been in the past, for all of us, even when we started Kedaara, it was entrepreneurial. There were lots of challenges. So I'm not one who's going to ask for 100 SOPs. Even when we talk about the PE industry, we don't ask for specific SOPs. We want consistency in policy. I was very proud to see what happened last Saturday in Delhi. And one of the things the leaders said was we will keep the government out of startups. So I think this is a situation where I see a lot greater interaction between the Ministry of Finance, SEBI, the RBI, and the government in the center. And I see a lot of good ideas coming in front. I don't think it's important to see what you will do for the industry, but I think as far as they provide an environment which nurtures this, which provides some of the catalysts which are needed, but the government shouldn't behave as if it's responsible and measure itself by saying, hey, we inculcated 5,000 startups in the next 12 months, then we're fine. The moment we start saying, hey, we've got to push these guys to enter a new sector or subsector, we'll be lost. So I think what's needed is not so much specific SOPs, but an overall environment where regulations are easier, people are out of there, not in the way, and an understanding like we've seen where government will promote it but not get involved in it.
Okay, are you looking to raise more money? Are you done with the almost $600 million that you raised?
No, we're not. We're way away from that, which is why we're talking so freely and openly. If we were in the fundraising mode, we wouldn't be talking to media. So on a serious note, we did raise the 600 million, but we've deployed about half of it. We're in no rush. We think the opportunities will only increase in the coming year with the decrease in valuation, which is always a challenge, as you know. And I think the other thing is if there is a correction in the public markets are obviously the alternative to private equity. With that I'm not saying I'm happy about that, but I think it makes us a little bit more relevant than we were in the last 2 years. So I think we will deploy our capital very carefully and selectively as we have done, and probably do fundraising a lot after that.
Manish, thank you so much for speaking with us and have a great Davos. And I hope your hands have not frozen to ice already.
Not yet.
Thank you.
Thank you.